So looking at price here, we've taken out the weekly buy side liquidity. If we take a fib and we run it from this range here, where we had this little small push into this top of this 1 hour, and then we moved away from the low to the high of this wick, and we run our standard deviations higher, we get about 48, 10, 50-ish. So we could get a move up there, but 2 to 3 standard deviations right about here. Um, we have this 15-minute in here. Um, could look to go bullish off of. We would really need it to dump past here and really show us that we're bearish. Um, we had this low, high, lower low, which gave us this breaker, bullish breaker in here, which we kind of came up close above, tapped a little higher. So um, maybe in here we could look to be a buyer somewhere in here. We can maybe measure this move up one and target this area. We can target that high. A nice 6 points there. So I'll put on just one. So again, we have this 5-minute bullish breaker, these consecutive 3 up close candles, and then a down move, respected it again. We have this 15-minute fair value gap. In here, we tap the top of, and then we also now create this 5-minute we're kind of retracing from. So um, Measure this swing low here. I mean, I like 48.11. So we'll go just under there. We're 48.10.50. So we do have this bearish 1 minute, so would like to see this disrespected and power through it. Close just at the top end there. We have this 1 minute gap from 942 in here. Can you kind of see, pull it across, respected it there. So that's a good sign there. This we could use as an inverse for value gap. Oh, not quick enough, but this is a 150. So respected this so far. I'd like that we close above this 5-minute gap here. Using this 5-minute gap in here. There's a small 1-minute gap here, so we can get through that. Taking the high here, running down to equity. It's a little bit more. Why did you not enter from the first tap? What first tap? Oh, I did down here, but then I scaled in on this one. First entry was down here. Second entry was here. Yeah. There we are. Just like that. Done for the day. All right, so quick recap of the breakdown here. Go to the 5-minute chart here, right? Uh, Overnight, we had kind of we had this 1 hour bearish for value gap here, disrespected it. So this PD ray disrespected, showing more bullish movement. We used it as an inverse, right? And then uh, we used this 1 hour bullish to bounce off of. So we're still pretty bullish here. Um, if you're looking for a reversal, you want it to really, really show you something very strong, like higher time frame, because we have been so bullish. So, 15-minute, we had created this. Let me move this out of the way real quick. This 15-minute gap in here, right, from this low to this high, came and tapped just the top of it, and then the 5-minute, we have this bullish breaker in the form of these three up close candles. 1, 2, 3. Okay, so we have this low, high, lower low. Now, what makes it invalidates it as a breaker is when we close with the candle body right here on this bullish candle above this high, right? So this one validates the breaker. You could have been a buyer here early when it taps in the top, just almost 50% right there. Look at that. Pretty accurate, right? So then when we were dropping down lower, we were looking at this 15-minute as an entry and the top of this breaker as an entry. So came down to the 1 minute and tried to get filled in here, but it kind of bounced right there, right? So we got in just at the top of this breaker, but still valid. You don't have to get the exact 15-minute for, oh yeah, we have this breaker luckily, right? But if we look left, right, if we move this 15-minute for value gap out of the way, we move this bullish breaker out of the way, when we look left, right? So silver bullet is from 10 to 11, right? But it doesn't have to be a fair value gap that's inside of this window necessarily. It can be outside of the session. So we can notice here at 9:42, this candle, we have this fair value gap in here. We drag it over, right? We have this 1 minute fair value gap. We respected it. Candle bodies closed inside, wick, right? Just painted outside the lines, but that's permitted, right? Same here. But watch the candle bodies, right? Respected, right? We move off of that. We also have the top of this bullish breaker and this 15-minute. So lots of uh, confirmation in here for bullish structure to continue higher. Now, how do you know where is it going to go, right? Well, we can use the 5-minute a little bit here and try to range. So try to guess the range, right? So if we don't look at London, right, we pretend London's not really there. Where was the last little down move before we started this big like up structure, right? Traditional market structure, right? We all learned when we first started trading, right? Boom, boom, this structure, right? Now, what was the last quick little down move before we started moving higher here? Well, it's this little wick to low here, this little movement lower. See how we just boom, that little move down, right? So we can take our Fibonacci from this low to this top of this wick, and we can try to line up one of these deviations with the next high above this one, because at the time we didn't have this high. We had just this one, right? 48.09 area, 48.08 three quarters. Well, the next standard deviation up is 48.1050. So that gave us our target. And then on the 1 minute, I was also looking at this move, right? This is the one down here. But looking at this down move at the open, right? Right at the 930 open, which is our opening range, we could do the same thing with the fib from this low to this high, right? Because this was the last down move before this huge up move. So we take this low, this little swing high right here, and we get 48.1150, which lines up almost with this 48.1050. So anywhere in here, you can look to set your take profit. Now, the trick is you don't want to go exactly like to the T on like the whatever price it's giving you. You want to kind of give it like a few ticks below. So I use this, I like using this lower one, right? And uh rather than this one, even though it's probably going to tap smash this one. See, 48.11 I liked as a just as a big figure. And I think Alan was talking about there's a 4 hour gap from March 24th first there as well. So this was a nice level that lined up with these standard deviations, right? So uh lots of confluence this morning, and then everything kind of lined up for this take profit. So now once we entered in off of this 1 minute, right, we started to drive up, and I wanted to see this bearish 5 minute disrespected, right? How does it get disrespected? With the candle body closure above, right? On this candle at 10:07. So we close above there. So then this one now becomes an inverse fair value gap, right? So with the idea of using this inverse, we also had a small gap in there, right? So we have a small fair value gap in there. Let's skip this over. Small fair value gap in there. Yeah, Steve's really liking the IFVGs. It helps with the order flow, right? You know what's being disrespected, so you know which way to go. But so this was disrespected here. We have this order block in this little 1 minute fair value gap in there. So I was looking for this. As long as this order block is respected, this fair value gap is respected, we wick through and drive higher. So it gave me confirmation as when I added and scaled in another contract, right? Now, and then targeting that high. Once we started coming up there, that's when I moved my stops up to entry. Now, the reason I only went small risk on such a high account is because we're so high up in price. We're so bullish and we're hitting all time new highs, right? Like a whole time. If you go to the monthly, there's like some, even let's go to the continuous contract, right? We go to the monthly. This is like some all time highs, right? We're breaking some monthly time frame. Okay. So that's why I was just being very cautious this morning on the buys, because we don't know exactly where is it going to want to start to turn around from now, right? So but if it does, we want it to really, really show us right, some bearish PD rays on maybe 15-minute hourly, 4 hour to, or some daily lows, right? To start taking out a lot of these bullish PD rays, maybe some lows down here. So I hope that was insightful and helped um, on why we entered in there, why we scaled in, all the confirmations, and then also projecting and targeting. Yeah, I mean, this was textbook. This is like an A+ setup. You had so many confirmations, right, lining up, and I mean, it's still going, but we got our piece of cake and we're done. You know. So added bonus, one thing I've continued to notice, and I'm pretty sure this is an ICT OTE model, from 7 to around 9:30 opening. Okay. Now pay attention here. From 7 a.m., 7:30-ish to 9:30 open, we will get a pullback. Okay. Whether if it's bullish or bearish. Okay. Now, what I've noticed is if London is bullish, 85% of the time, New York is going to be a continuation. Okay. That's one. Two, this pullback that we see and we get from that 7 to 9:30-ish, if we take our Fibonacci and we take this low, right, before we started this pullback, this was our low to this high, switch to the ICT optimal trade entry. Okay. So we want to use the candle body, right? So we're using this candle body low to these candle body highs before we got this pullback down, right? You can be a buyer at the 70.5 level. Okay, we have this order block with this fair value gap for added confirmation, but this is a very high probable setup that happens almost every day, and you can target 62. Okay, this is at 62 level. Low hanging fruit would be the 15% level or zero, taking out these equal highs. But if you want to be a holder, 62% level, right? So go back and back test this. Yeah, I'm serious. I've been noticing it almost everyone. It makes me want to get up earlier, but yeah. So from 7 to about 9:30, there's on the 5-minute chart, look for this pullback to 70 level, and then put your stops below 100 or below this low, right? And then try to catch the 0, 15, or 62 level. And it's pretty money. So let's get this on. All right, guys. Well, I mean, that's it for me. That's a quick one in and out today. Um, hopefully you guys got a good one out of that. It was very insightful. This was just textbook today. Was money. So let's look at the news real quick. So tomorrow we have consumer confidence at 10. So probably want to wait at least 30 minutes after the news to look for anything, or um, wait till maybe Thursday to trade after 8:30 a.m. We'll probably get a lot of volatility because of the final GDP and unemployment claims. So looks like most of the volume is going to be coming uh, tomorrow and Thursday. So it might be a good trade on Thursday potentially. So I'm very low risk this week. So this will be the last week of trading before we take a break into the new year and enjoy the holidays. So, but probably be looking to put something on Thursday for sure because we have news at 8:30 a.m., which gives us a lot of time before the CME open in our silver bullet windows. So, all right, guys. Well, until next time, I will catch you guys tomorrow. And yeah, I'll see you guys in the chat room.